Welcome back to Sense and Sensibility. Today, my friends in finance, I thought it would be interesting to unpack the two major antitrust lawsuits that Google is facing. Both have the potential to unravel the massive company. The first antitrust lawsuit was originally filed by the Department of Justice against Google in 2020, allegedly for having a monopoly in the search market, with a focus on the fact that Google has been paying tens of billions of dollars to Apple, and has also been using its subsidiary, Android, to remain the default search engine. In August 2024, Amit Mehta, the judge, ruled that Google was a monopoly. And in this November, the DOJ submitted a proposal that recommended Google to possibly revisit Android division's integration with search, end its search engine partnership with Apple, share its search and ad data with competitors, and most dangerously to Google, sell its Chrome browser. Obviously, Google didn't agree with those recommendations. But in their counterproposal, Google was okay with having different search agreements between different devices, so that an iPad and Mac computer could have different default search engines. Google would also structure its search revenue deals with hardware providers to 1 year instead of multi-year contracts, and be more flexible with search and Chrome on Android phones. The arguments for the two proposals took place in May. Google has already stated that they plan to appeal no matter the remedy, which is expected to occur in August. The fact that Google plans to appeal no matter what decision is made ensures that the end of this lawsuit and the consequences it could levy upon Google shouldn't have any type of immediate impact on Google. The second antitrust case filed by the DOJ was for a monopoly in the ad tech stack, which is made up of 3 parts, which consists of the publisher ad server, which help publishers of content manage ads and show them, the ad exchange, which is the place where ad space is bought and sold, and the advertiser tools, which is where the advertisers and brands buy ads for the web. Google owns all 3 of these, and the DOJ argued that Google's ad business has gotten extremely big and has tried to choke out competitors by owning multiple parts of the services that place ads on the internet, which gave Google an unfair advantage. In April 2025, the judge Leonie Brinkema officially ruled that Google had performed anti-competitive acts that harmed Google's publisher customers, the competitive process, and ultimately consumers of information on the open web. However, only the first 2 parts of the ad tech stack were monopolies, and the DOJ failed to prove Google had a monopoly for open web display advertiser ad networks. The third part of the stack, Google has said it has kept on fighting, and Leanne Mulholland, Google's Vice President of Regulatory Affairs, has said that Google plans to appeal, and said, "We won half of this case, and we will appeal the other half." Google still believes that their publisher server and the ad exchange aren't harming the competition. As of now, the remedy hearings that will decide the consequences for Google are going to be held in September. Obviously, Google will argue against any remedies, while the DOJ wants Google to untether their ad tech stack. And since Google is planning to appeal, this case is sure to continue on for years. Both of these antitrust cases are bad for Google and threaten to reduce Google to a shadow of themselves. Even if only one of these cases reaches an unfavorable conclusion for Google, the company would lose a lot of value. Even if Google ultimately wins, they could go the way of Microsoft, whose culture crumbled during their antitrust suit and resulted in a lost decade from 2000 to 2010. And by the end of these lawsuits, Google might not be a monopoly anyways, and could just miss the next technology wave like the metaverse or AI and could pass Google by. This would be like Standard Oil, who had a 91% market share in 1904, and 2 years later, an antitrust suit was filed. But by the time the case to break up Standard Oil was finished in 1911, it had a little over 60% market share, a far cry from its peak. No matter what, Google's business model is still great and will be a cash gusher for years to come. As to if you should invest, it really depends on how you think these cases will resolve. But once these cases and the uncertainty that follows is over, Google will still probably remain a great and revered company. It just might be in a divided state. Thanks for watching. Remember, this isn't investment advice, just stuff you should know. Please like, share, and subscribe so that you and I can continue our investing journey together.